Hi all, I'm Luke Leonard and part of the Advisor Growth Track here at Bogart Wealth. April is Financial Literacy Month and I'll be taking you through a few topics about the basics to personal finance. There are a few main topics we'll cover today. 1, how to budget your monthly expenses, checking versus savings accounts, credit, taxes, and common questions received about personal finance. The first topic is going to be about monthly budgeting. We've put together a monthly budget example, and the monthly budget is consisted of income, monthly expenses, and flexible expenses. When it comes to budgeting, there are many ways to save money throughout the month without affecting your lifestyle. One way is buying the generic brands at the grocery store versus the name brands, or preparing dinner rather than ordering takeout. While it is easier said than done, myself included, it can save you lots of money when you break it down month by month. Be sure you're getting the best price on your monthly services: cellular, auto, insurance, Wi-Fi, and cable. Also, be aware of your monthly subscriptions as well, because they do add up quickly. When it comes to all the streaming subscriptions, HBO Max, ESPN Plus, Netflix, gym memberships, etc., it's hard to keep track of all of them. Also, be aware of the household utility usage, such as air conditioning, heat, and water. High usage can increase your bill very quickly. While budgeting is important, the next topic we'll be covering is banking. Most banks have several different types of accounts. The two most common are checking and savings accounts. Some banks charge fees for having an account and for various transactions as well. To get a free account, most banks also require direct deposit or a minimum balance. Find the account and bank that is best for you. It is a good idea to set up an account that has overdraft protection as well. When it comes to your checking account, it is used to pay bills, cash checks, and safely keep your money. It also facilitates direct deposit, which is the safest and most convenient way to get paid. Most accounts require account owner to pay for paper checks as well. This also can be linked to a debit card. When it comes to your savings account, this account provides you with a higher interest rate. You also cannot access this account as easily as your checking. If you want money from your savings account to go into your checking account, you'll have to transfer it. This is also a good place to build an emergency fund or save for the future. The next topic we'll be talking about is credit and credit cards. Credit cards is issued by a bank or financial company. Get a credit card and treat it like a link to your bank account, even though it's not. This also helps you build your credit score. If you don't have a credit card, you also can get a secured card. A secured card is where you put down your own money and that creates the limit on the card. This also allows for you to build credit in about 6 months, where then you can apply for an unsecured card. Debit cards. It is directly tied to your bank account. When you spend it, it'll automatically be deducted from your account. You will also be charged extra fees for an overdraft. It's like spending cash without using paper money or checks. This will not improve your credit score. Credit. What is credit? Credit is the ability to borrow money. Why is credit important? By having a strong or high credit score, you can increase the amount you can borrow and get lower interest rates for the purchases, as well as rental and insurance rates too. This will save you money. The higher your credit score, the better. Credit report. What is a credit report? A credit report is a detailed breakdown of an individual's credit history prepared by a credit bureau. Credit bureaus collect financial information about individuals and create credit reports based on that information. And lenders use the reports along with other details to determine loan applications and creditworthiness. What determines your credit score? 35% of it is payment history, 30% is amounts owed, credit utilization, 15% is length of credit history, 10% is credit mix, and 10% is new credit. What is in your credit report? Your personal information, trade lines, delinquent accounts, and public records. Who looks at your credit report? Lenders, such as credit card companies, store card companies, auto loan companies, mortgage companies, and personal loan companies. The higher your credit score is, the more willingness these lenders will have to approving you for loans to buy cars and homes. It is crucial to maintain a high credit score. How does your credit score affect you financially? High scores allow for lower interest rates on loans, ability to receive loans and credit, reflects borrower is a low risk to lender, ability to acquire conveniences such as cell phones and credit cards. Low credit scores will have higher interest rates on loans, inability to receive loans and credit, and reflects that the borrower is a high risk for lenders, inability to acquire conveniences as well. How do you get your credit report? There are 3 credit reporting agencies: Equifax, TransUnion, and Experian. You also can request a free credit report from these 3 agencies each year. The last topic today we'll be talking about is taxes. Taxes. You will pay federal and state income taxes as well as Social Security tax. these are typically withheld from your paycheck. Understand your pay stub and all the deductions. Use your employer's human resources contact. In February, your employer will send you a W-2, which includes wages and tips reported to the IRS the previous year, as well as total taxes withheld. The requirements on who needs to file depends on your income, filing status, age. Typically, anyone who has a job should file a return. If you have significant income from direct payments, you'll need to file and perhaps pay income tax or Social Security tax on that income as well. The U.S. federal taxes are due April 15th, but you can start filing them after you get the paperwork from your employer. The IRS-sponsored Volunteer Income Tax Assistance Program, VITA, and Tax Counseling for the Elderly, TCE, program provides free basic income tax return preparation to individuals with low to moderate income, the individuals with disability, and non-English speaking taxpayers, and the elderly as well. In addition to free assistance, many sites offer free electronic filing. During the tax season, VITA and TCE sites are located at libraries, churches, community centers, and shopping malls. In addition, some online tax services also allow for free filing. One example is TurboTax. This is what an example of a pay stub should look like. To wrap up the presentation, we'll finish with common questions and answers. Question 1. Why would you have both a debit and credit card? A debit card is direct access to your checking account, which enables you to withdraw and spend money from that account. A credit card is money you're borrowing from the credit card company, and any money you spend, you have to repay. Question 2. What happens if you overdraft your checking account? Answer. If you overdraw your checking account, the bank can pull funds from your savings to cover the shortage, if you have enough funds available. Your bank may still charge you a fee for transferring the funds automatically, but it's typically less than an overdraft charge. Question 3. What happens if you don't file your taxes by April 15th? Answer. If your return is over 60 days late, the minimum penalty kicks in, which for tax returns due in 2024 is the lesser of $485 or 100% of the tax rate. This wraps up my presentation on Personal Finance 101. Thank you for watching, and I hope you found this helpful.